Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, August 30th, 2019. A couple considerations. This is the last trading day of the month. Sometimes you get some back and forth volatility with window dressing. It's also, we're heading into a 3-day weekend, so keep that in mind. Any positions you go home with tonight have an extra day of overnight risk. So let's just take a look at the I'll start out here with the futures. A lot of what I updated this morning, put a couple posts on the site, but I just wanted to hit on those. So we have right here, if you can see, the makings of a small wedge. So there's cross currents. The larger pattern, which quote unquote is more technically significant. It is when you have a a downtrend line that spans months or many weeks with multiple reactions versus a smaller one. So what I'm seeing on this chart, what stands out to me is a breakout of that downtrend line right there, the breakout of the downtrend line off the highs back here. That was the all-time highs, and that's that. So as long as we have that breakout, it's intact. Now I suspect it fails. I haven't made it clear. I'm still going to hang tight no matter pretty much what happens today, because we'd have to have one heck of a reversal to get anywhere past. I told you guys before. I think it was that give it a little room above the recent highs. Was expect a pop. In fact, I have this line here at 77.50, but that really wasn't. We had quite a few reactions on NQ that went past there. So that's really the highs. We just basically came up and yet another failed test of those highs. Now, it's failed so far with a reversal at those highs, and it is somewhat impulsive. Move down today has been somewhat impulsive, but it's not a clear failure. So I'm going to show you the levels that I'm watching. It's anybody's game. Nothing's changed on my view. I think we're still going to do this soon. However, being that we're back up again to the top of these ranges, I have to say it, lessens my convictions somewhat. So here's what I'm watching for now. First of all, the breakout that we had above these downtrend lines. I'm going to get to the index charts in a second. Some people watch the futures, some watch the index charts and trade the indexes. I like to look at both, and I'll give the benefit of the doubt. You want to see both breakout. So let's just, on this one alone, on NQ, we have a breakout so far. We've had a couple back tests of that trend, not yet, but a near back test or some support there. And for the bulls, they want to see this. It's fine to have a breakout and a back test, especially because we're overbought to get here. This is one reason, and I mentioned it yesterday, right here. This overbought reading told me that, look, we're not going to go much farther, most likely, that is, based on all the other overbought readings. And I also made mention of one of those videos that sometimes you hit the overbought and then you consolidate for a while, you pull back, and then you come in at another near overbought level, and that gives you negative divergence. So, and that's exactly what we have here. So let's start with that. So again, I'm giving you everything, both sides of it. The bullish scenario would have us come in, back test this level, work off the overbought conditions, and then which we have. See, here's the RSI. This is overbought. Now we're all the way back down in the middle of the range, right? So we're no longer overbought, at least on this 60-minute time frame. And that would have the bulls would have it doing something like this. And if they pop much above that 78.18, there's a good chance they can try to take it to new highs. Although, let me say this, I don't think it's going to look like that. Why? Well, we have a confluence of resistance. There's a lot of supply up here. A lot of trades occurred when the market was topping out back in July. There's all this trading here. So again, it's not going to look like this. I'm just showing you, a bullish scenario if you are bullish, and most importantly would be to hold and have just a little reaction here like these other ones, but then turn around and power through those levels. That's not my preferred scenario, at least not at this point in time. If things change, I'll let you know. So what I'm watching, again, I think technical analysis is kind of like the ink blot test, where everyone sees what they want to see. They look at the same charts, and I think a bull, those that believe that the recession fears are overblown, whatever reason they think the market's got a lot more juice left in it, they see a breakout in a back test. And I'll tell you, if you're in that camp, that's where you go long. It's TA 101. You go long on a breakout, and if you miss the breakout, sorry, that should have been a circle tool or a box tool, then you go long in the back test. Now what I see, and again, in fact, everything factors in, the longer term charts, breadth indicators, everything I've gone over in recent weeks. I see what may prove to be and may likely prove to be a fake out or bull trap, a false breakout. Lots of names for them. In other words, you break out and then you fail. So I'm watching this little 60-minute bearish rising wedge, and as I showed you on the post this morning, wash, rinse, repeat. Nothing's guaranteed. I wish I could say with the utmost degree or 100% confidence that you have a divergent high, you're going to have a correction, but that's the MO. It's a big part of my trading. I look for these divergent highs, and much more often than not, I would say well over 90% of the time when you have the confirmed divergence, it plays out for a correction. So right now, we have a small rising wedge. If that plays out, then that should take us back down below that trend line. At the very least, we can come in and test it at lower levels. Let me do this. Let me make it a little clearer. And again, I know I'm throwing a lot of scenarios out, but I'm telling you this is the one I like. So if we come down, we could test that. We could back test that line, maybe overshoot it for a bit. But here's what happens. This is the way I view technical analysis. If and as each of the support levels that I have on this chart, for example, 76.97, we'll call it, or 76.96, whatever you want, the trend line here, which it looks like it's just starting to crack, or I can move it around if you zoom in. Let me do that for you guys too. See some reactions there. If I want to clean it up, I'll grab that trend line. I need to move it, catch these reactions a little better, and we're right on there now, plus price support. So let's just say right now, at this point in time, this fade of this rally today, we have backfilled the gap and went negative on QQQ by a small amount. So far, that's just a pullback to support. And with divergence, the one thing about it is you could continue to diverge. You could have another thrust up like this and still have the divergence in place. Maybe not. But what I can tell you is if and as each support level below gets taken out, that just further strengthens the bearish case and strengthens the case that this was a fake out, a false breakout, especially a solid move back below that trend line. Again, a back test of it, you could still rally off it. But should we break it, should we break that support level, then 76.50 and then 7600, that then opens a door. And everything I was saying, last time here, I think right back here, that if and when we start to get down to these lows, this is the big level here. You've had now pretty much in this trading range 1, call that 2, 3 tests of the highs. Look, we also have 1, 2, 3 distinct and roughly equal tests of the lows, excluding this over, this little spike down here. So this is a big level right here, and even if we start to even get close to it, if we come down here, it's going to have bearish implications, because that would mean once again yet another failure there, which is a knife through the heart of the bulls that we're looking for a breakout, and it would invigorate or energize the bears. So I would think, again, if we fail and get it down to this midpoint, it's pretty important support here, that will continue down through it. Maybe reaction along the way, of course, but that's what I think will happen, and that's what I'm looking for. Now, we're not going to have a resolution of this today. This will all most likely happen next week. I don't think we're going to go up very high today. I don't think we're going to go down very low today. Again, to the levels that are really tell me a lot, give me a lot more clues. I think they're going to keep everybody guessing over the weekend, and then unfortunately what happens, being at a 3-day weekend, you can almost count on something from Trump, some kind of tweet to come through to try to pop this market, to get that breakout to happen. I don't trade around worrying about tweets for or against my positions. Just not I don't think that's an effective trading strategy. I'll put more faith in the charts, but the potential's there. So you have to consider that if you go home short or long this weekend, that you go home short, maybe the futures do rip, because again, you have 3 days, a 3-day weekend coming up, and a lot can happen over that 3-day weekend that could influence what market participants think. And likewise, you could also it could go the other way. So I don't know any other way to spin it. We're at a critical, very important technical juncture that can break either way. I gave you which way I think it's going to break. Trading entails risk sometimes. I mean, that's the whole nature of trading, is you're taking risks with every position, and so do what you're comfortable with. The old saying is sell down to the point that you can sleep at night, or if you're short, cover up cover down to the point at which you can sleep at night. So there's probably the big level down on the top of the trading range on NQ, 77.75 or so. And again, that's 3 failures there. All right, enough on NQ, but those are the things I wanted to point out. The divergences, they're still over. Well, we were overbought, but again, more importantly, the negative divergences. In fact, we already hit overbought recently. So here it is on ES, same story. You can see we had negative divergence here, negative divergence on the RSI right here, and again we had divergence on both NQ and ES back there. And again, divergent high, divergent high, divergent high. This is a steep little wedge. There's our uptrend line to watch. It's comparable to QQQ or NQ that I just showed you. Let's tighten this one up, clean it up a little bit, come in, catch those reactions, maybe give it a benefit of the doubt, come right about here and say that just like NQ I showed you, we were testing that trend line when I left that chart a minute ago, and we're testing it right now. So it's a rising wedge pattern. You want to see an impulsive breakdown below there, and if so, here's your next support around 29.14, then the trend line. Bulls want to see that, bears want to see this. To me, it's that simple. Maybe an oversimplification of things, but that's pretty much the gist of it. All right, as I mentioned this morning, what's going on with gold and silver and Treasury bonds? I am not seeing what one would expect, and that has actually, I talk about my shift in my expectations or convictions on where we're going. So overnight, what I saw has shifted me a little back more to that bearish camp, because this, as I told you yesterday, in spite of clearly bearish technicals on the daily, 60-minute charts, divergences, overbought conditions, gold and silver. Gold's more the flight to safety. Silver has more industrial applications, but I was focused on silver because it played the game of catch up that I want, but I think it got ahead a little of itself. But you could trade and hedge up with either of these. So look, it did break down. I mean, we had this little wedge type pattern, divergences there, but these divergences aren't playing out for much. They are playing out for correction. Like I said, divergences almost always work. It's a matter of, normally you'd expect after a big move like this, a deeper drop. And so what this is telling me, at least this two and this, is that there continues to be a tremendous bid beneath these flight to safety assets, gold and Treasury bonds. Whereas normally, as overbought as they have been recently and are, and with these divergences on the daily and 60-minute charts, and then coupled with the rally, the stock market has mounted quite the rally. I'm going to go to another screen right now and just measure QQQ. QQQ, for example, from the lows on, again, I'm on another monitor, I'm just trying to gauge the percentage of this rally. Last Friday, the 23rd, to today's highs, QQQ has rallied 4%. That's 1 week. And you would think that if the smart money, if the institutional investors and really market participants as a whole were buying into that equity rally, they'd be selling off or reducing some of these risk off positions that they bought, gold and things like that. So we're just not seeing the money come out. It tells me there's a voracious demand. It could end tomorrow. It could end right after I do this video. It's possible, but these are things I'm watching for. I can't, tell you what's going to happen, but if gold all of a sudden starts to drop and then it keeps smashing through each of these support levels, then that tells me, what? The majority of market participants now that have been buying gold believe that the market's going to go up, so they're selling their gold and treasuries, which means they're probably going to turn around and put that money into stocks. Right now, that's not the case. So that makes, to me, it makes the recent rally a little bit suspect. The fact that these flight to safety instruments are still holding up extremely well. Yes, did we go down in both yesterday? Yes, but not by a whole lot. And not by what these charts would indicate. ZB fell to this first support level. It's just a minor minimum pullback target right here. You had these reaction lows. So far, it's held. And here's a downtrend line. If it pops this downtrend line, it's probably going to rally, make another run at the highs. And if it pops the highs, that's bullish. And I really doubt this is going to happen if the stock market also does that at the same time. So this is what I'm watching, again, to try to give me a little extra insight to whether a breakout, if we do pop the top of those trading ranges with conviction, I should say, whether we're going to go continue to rally in the stock market. Right now, I'm not seeing it. I start to see a lot of money coming out of treasuries and gold and even silver. I mean, look at silver last night. Came down, hit that minimum target, got the bounce like I expected, but it's quite the bounce. It shows the buyers stepped in very aggressively at the earliest, shallowest, slightest little pullback. Despite it wasn't just a random pullback either. These, when you're in a trend, you get these little pullbacks. Say those are dip buying opportunities. But this case, you had a clear uptrend line, price channel, divergence. And so that to me would have indicated at least that. That's why I had T1. That would have been my minimum target. Although I did add that as potential earlier target yesterday, but still, that's what's going on. So there's my kind of my mindset watching these risk-off assets, which continue to catch bids, on any little pullback here. And to me, that's just a let's say a red flag or a sign of non-confirmation in the rally in the stock market. Okay, QQQ, quick look. Remember we have the downtrend lines on QQQ and SPY as well. There it is. There's your breakout. Number one, it's not very impulsive. Breakouts, you want to see, there's two reasons why I'm a non-believer of this breakout. Number one, it's not impulsive. You want to see impulsive, high volume. You can look down here. I don't know if you can make out my volume bars there. I have them turned down so they're not very, but this is high volume. There's some high volume spikes. So we're lacking volume, which to me is one of the most important criteria in a breakout. An impulsive move and on high volume. That's lacking. Number two would be the fact, and I talked about this yesterday, we spent a lot of fuel just to get to there. This is my experience. Even when I'm bullish looking for a breakout of a triangle pattern, a wedge, any kind of technical pattern, I don't chase it when we spend a lot of fuel to get there. In other words, when you were overbought just to get to that level. Because in my experience, much more often than not, any breakout that happens when you're overbought, when you get there, will at least come in for backtest, if not fail. And so therefore, that made the breakout more likely to fail, in my opinion. Or still, we haven't failed it yet. We're still above the trend line. So what would I have wanted to see if I was bullish? I would want to see a run up there, but then some consolidation before that to work off the overbought conditions, and then a breakout when you have the energy to continue to run afterwards. So that's my thoughts now on QQ. But so you can say, look, a breakout of the downtrend line, but yet we're still below the top of the recent trading range, the August trading range. And again, that's when we fell down here. This is where we failed every time. And remember, I mentioned this. QQQ hit a high of, I think, 189.44. So we actually kissed and reversed off that level in the pre-market session. So that we have had, a rejection there, just not in the after hours, or not in the regular trading session. SPY. SPY did hit the top of its trading range. 294 is the magic number for me. Hit it ever so slightly, went above it, and immediately reversed. So that is yet another failure at 294. But again, not the kind of failure that bears can start high-fiving. If you're short, that's just a tag. It doesn't mean we can't power up. Again, we're overbought, so it's like I said, maybe we do this and then break out. If you want to start remotely high-fiving, if you're short, you want to see an impulsive move down. You want to see any backtest to this trend line fail, come back down here, and I think this will probably do the trick. A move back down below that key 289.90 level. So how could that look? Well, probably again going to take place next week if we get it. If we just gap up and continue to run, then wow, that's pretty. It says there's a voracious demand for stocks. Whatever, we'll see if that happens. But if not, let's say my most bullish scenario right now, discounting this, we just take off today or tomorrow or next week. But the most bullish scenario would be a back test. We could still come in and make a successful back test. So we'll have to watch that next week. So again, we're not going to have I won't have the highest degree of confidence that we are going to break this and drop another 7 to maybe 20, even 30% in QQQ, which are my downside targets. I think I'm looking for maybe 8% from where we're at today to my next swing target in QQQ if we break the bottom of the ranges. But I probably won't have any visibility on that until next week. So those are the levels I'm watching right there. Let's just say 294 down to about 290, because again, depending on how long, if it gets there, how long it could be, it could, by the time this trend line comes in and we get it back tested, we may be all the way down here like this to that level there, and that would be pretty significant. It would be intersecting support levels if and when we got there. So again, just levels I'm watching, and I think that's it. TLT traders, there's your TLT, there's your divergent high, clear as day. Negative divergence, breakdown, impulsive, but yet no follow through so far. We could break it, and there's that level. So this is TA 101. If you break the yesterday's lows, that's pretty decent support. I would give it a good shot that we're going there. If that happens, it's probably going to mean the market has another leg up soon. So I'm still holding on to those hedges. They didn't work so great overnight, but so far today, the indexes have gone red. At least QQQ, that's the only one that I'm short, or it was. Yeah, let me see if it's still red. No, green now. Back to flat on QQQ. There it is. I'll wrap it up here with, I didn't want to do an all-inclusive video, and I've been hyper-focused on the markets lately and those risk-off assets because I think, the correlation there. But here's my CL chart. CL recently put in this divergent high. I think that was mentioned in the trading room, negative divergence. And that divergence has played out for a brief overshoot of the back test of the trend line, plus we came right around to this 5480 decent support level there. You can see a lot of reactions on that level. And so and I wanted to touch on this one because it meshes with the stock market. It's not mere coincidence. You have a same, almost identical downtrend line. You have almost an identical breakout and almost an identical backtest. Crude is trading once again correlated with the stock market. Why? Well, first of all, it's economic growth. If I'm wrong, and a lot of people are wrong about these recession fears and imminent recession, if those fears are overblown, well, guess what? The economy is stronger. That means earnings are stronger. The stock market goes up, and it means the demand for crude is stronger. Otherwise, this, like the stock market, I suspect will prove to be a false breakout. And as I said, fewer things in trading and investing are more bearish than a failed long-side breakout. It's also, if you look at it this way, a failure. Making a big mess of this thing. It's also a failure of roughly a triple top. The last similar trading range. This is really, like I said, crude's been trading like the stock market recently. So there's the trading range, and same kind of net result. I think break down to the bottom of the range will bring in more selling, and a break to the upside is bullish. So I'm still here, still favoring that. As I said before on the front page a couple times today, still planning to go home short over the weekend in my swing trading accounts. Haven't seen enough to convince me otherwise yet. And so we'll pick it up there. If anything happens, anything significant by the end of the day or before the end of the day, I'll put a video out and I'll do a closing market wrap after the market closes today. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.